Hey guys, it's Clint Coons, and in this episode, what I wanted to do was talk about funding options for different types of real estate investing. You know, a lot of you that watch my channel, you're coming here because you have single family homes, you're into short term rentals, you're into flipping property, even some of you are into new construction and land development. And a common question that I keep getting is, how do I finance these deals? What does it take to put these things together? Well, I thought what I do is bring on someone that we at Anderson person that we work with, that we refer our clients to, that's part of our funding community. He's been helping out hundreds of our clients gain access to funds that ordinarily they didn't think they would have access to because their local lender was telling them, oh, we can't do that deal. I don't like to work with people who say no. I like to work with people who say yes. And the person I have on here is Kurt Nederveld of Rainstar Capital Group. He's the CEO, he's the founder, and he is an expert when it comes to funding. Kurt, thanks for coming on.
Thank you, Clint. Appreciate the opportunity to speak with you and your audience, and excited to spend this time together.
Awesome. All right, so let's just jump right into it. Oh, actually, before we do that, why don't you tell people how you even got started in the funding business? Because you've been doing it for a few years, but there's a story there that I think people want to hear, so they get some sense of who you are and your approach to helping out investors.
Yeah, for sure. Thank you for this opportunity. So my background, I launched Rainstar Capital Group 8 years ago, and in January of 2014. Prior to that, I had launched a marketing firm, Clint, called Rainstar Marketing, about 3 years
Mhm.
prior. And the marketing firm went on to serve over 100 clients that were primarily fund managers and direct lenders in commercial real estate and corporate finance. And while I loved marketing, we did a ton of email and PR news releases, and what we became really known for was doing LinkedIn marketing. I started to realize I was in the wrong business, right? Because I learned about all the money that was being made, on the direct lending side, and then also on the capital advisory side. So I always joke that the marketing firm gave us a huge advantage into the business that we have today. But it was like the internship. This was like playing on the football field, right? So since launching
Mhm.
Rainstar Capital Group, we've been blessed to transact in over $1 billion worth of financing. We've grown as a company. We're in 12 different locations across the United States. We have just under 40 employees. And we've built this all encompassing lending platform. We have 250 registered lenders on it that are all banks, hedge funds, private equity firms, specialty finance firms. And we provide for our clients commercial real estate, corporate finance, small business, and equipment financing solutions. And so we, for the better part of 8 years, have been at all the capital markets conferences. If you could see my stomach, we've had too many good steak dinners, going out and hobnobbing with all of our lenders. And what we did is we assembled all these lenders onto one easy to use platform for, the four areas, but then we've divided it into an A, B, C, and D lender model, right? Because all of lending, it doesn't matter if you're doing an equipment loan, doesn't matter if you're financing a rental property or an office building, whatever the loan is being made for, it's all a function of the three C's, right? Cash flow, credit, and collateral, right? Also, you can add, character, right, into that as well. And so, what we've done at Rainstar that our clients just absolutely love is we've blueprinted the entire process of accessing all these product lines. Okay, and then along that lines, we've also placed a very high focus on education. Right, it was something as I was complimenting you before we started this video. You, for your firm, have placed a high focus on education, right? So we've shot like over 1,000 videos that we have out on the internet, and these videos are very much focused on the strategies that either the business owner or the real estate investor can apply to be able to use these different products to be able to grow. And so if you see a lot of our marketing, Clint, we're all about growth capital. Okay. And if you're in the real estate business, whether you're on the residential side or if you're on the commercial side, what you care about is growing your portfolio. Okay. Growing your portfolio creates stronger cash flow. And at the end of the day, you're building that wealth for your family, right? And you're creating that generational wealth that is what the bedrock of wealth building is built off of, right? So with our platform, it's great because we have all the solutions, right? If you go to our website, we launched our own magazine called Rainstar Capital Group's Ultimate Lending Guide about 6 years ago. The magazine highlights for all of our clients all of the different lending products. It breaks down the credit scores, the revenues, the LTVs. It literally breaks down every one of our categories, and clients can go check that out. And over the years, they found that to be a huge tool because let's be honest, right, Clint? Sometimes going to get financing is like speaking a second language. Okay, if you're a new real estate investor out there, you don't know what you don't know, right? And you don't know all the different solutions out there. And so with Rainstar, not only do we have all the solutions, but we've created an educational platform that shows the investor how to use those solutions. And then finally, our entire team, Clint, is primarily made up of ex-bankers. Okay, we have former presidents of banks, we have high-level middle market, CNI, commercial real estate, SBA bankers who then act as the guide to the client to then help them achieve their goals. So they come to us, right, in our first call or our first opportunity that we meet them in person or at a conference, whatever it is, or through Zoom, and we really understand their story. Okay, we understand what it is they're looking to accomplish. We do an analysis. It's what's called our debt discovery process, understanding what their three C's are, right? Their cash flow, their credit, collateral, and then we match those three C's with the ABCD model, right? Because obviously somebody with a 550 credit score, right? Maybe they've been hit in the past. They went through a divorce. Maybe they, had a business go bad back in '08. We've all had hardships, right? I mean, that's what life is about, right? And my point though is obviously they're not going to qualify for A paper, right? They're not going to get the 3-4%, long-term money. They might have to use a B or a C lender for right now. But then what we've always done over the years, Clint, which our clients just absolutely love and appreciate, in the event that we have to use a B or C lender because they've got lower credit or they don't qualify for A paper, one of the biggest themes over the years has been what we call bridge to bankable. Okay, bridge to bankable is a huge strategy that we teach our clients where if they have to use these B or C paper products, it doesn't mean that they're never going to be able to get into A paper, right? It just means that the property doesn't qualify today. It means their credit doesn't qualify today, right? So typically what we do, and I keep joking we should start a consulting company because we give out all this free advice where, we can say, hey, if your credit score is low, go get credit repair, right? Or if the property is not at the stabilization rate and the occupancy level that it needs to be to be able to qualify for the A paper, here's what you need to do, right? And so we'll help you with a B paper lender today, like a bridge financing, right? And then once the property is ready, reach back out to us, right? And we'll get you refinanced into, into that long-term debt. So everything that we do is all about walking down the journey with our clients, Glenn. Okay, and the beauty of Rainstar is that we can literally take flat, somebody buying a raw piece of land, we can finance that. Then if they want to go vertical construction and they want to build the rental property, great, we can finance that. Once it's stabilized, they have a renter in it, great, we'll refinance them, get them into that great 20-year money, right? So I'm really excited to dive into some of these things with you today. And but hopefully that gives you just a little bit overview on who we are, our track record, our approach. And at the end of the day, what it's really about is that educational component, because what I found is that really real estate investors are just solving problems, right? They're figuring out how to get deals done. And my message to all of them is that, well, if you have one lender, your local bank, you're only going to be able to get so much done. If you have a platform, of 250 plus lenders, then you have a stronger ability, to solve problems, right? And that number one problem, I know we're going to talk a lot about it, is, every real estate investor, developer out there is held back by equity, right? You can always figure out how to get senior debt, right? But the trick is the down payment money, right? And so a lot of what we teach our clients is, we've gone out and figured out what the highest leverage products are, right? High leverage is genius. Like it's the name of the game. Now, obviously, there's certain situations where you want to be more conservative, right? And there's nothing wrong with that. But if you're truly focused on growth, you're held back by the balance sheet equity that you have, right? In your at your disposal. And second is your ability to raise that equity, right? Whether it's from family, friends, whether it's from high net worth individuals, whether it's more on the institutional level or family office. And so a lot of what we do when we first meet a client is really understand their equity story, right? Because equity is really what, at the end of the day, is holding back a lot of these investors from going, from 100 units to 1,000, 1,000 units to 10,000, right? And so, we obviously don't help with equity, right? We don't raise equity for clients, but there's a lot of different very strong strategies that you can use, to raise that equity. And then obviously we can bring the senior debt. And my message is if we can bring in a higher leverage product that saves you the equity. And so, for example, if you're a builder or developer and you're going into this year and you have the ability to do 4 projects, well, if we can shave down that equity and put that into a 5th project, that's a big deal, Clint. So I'm excited to dive into some of these details and kind of go through that. But really, what we talk about first is strategy, and then we can dive into the details of the transaction.
Okay, so what I'm concerned, or what I want to know about is, say you're a single family investor.
Yep.
Okay, I want to go out there and buy a single family home, treat it as a long term rental.
Yep.
Now, when I started investing in Memphis, Tennessee years ago, I would work with lenders
Yep.
who would come in and finance not only the acquisition,
Yep.
but also many times the rehab as well.
That's right.
And so all I had to come out of pocket was a few $1,000s. You had some points, and sometimes they even roll the points into the deal.
Yep.
And then I would have this property after it got completed, it was rehabbed, that had built-in equity of 20 or 30%.
Yep.
So I could then move, as you stated, from that D level, they would refinance me into the A level product.
That's right.
So I could pay off that D level that had the higher interest rates.
Mhm.
And many times I wouldn't have to pay the interest. All that would just accumulate for a certain period of time.
Right.
And then I would be into this lower interest rate product. So the question I want to know is, do you guys do deals like that? Do you have that process set up? Is that what your lenders do? Is that a possibility for a real estate investor who doesn't have a lot of cash right now, but can find a property that fits the criteria?
Yeah, so for the investors that don't have a lot of cash, there's a bunch of different strategies, right? Like you just hit the nail on the head, right? You first have to identify. It's kind of like reverse engineering, what it is that you want to do, right? So when you can identify based on the 3 C's, right, the cash flow, credit, and collateral, which of the product lines that they can qualify for from the highest leverage perspective, when you break down the capital stack, once you know what that piece covers, then you can figure out what it is that you got to come up with, right, or what it is that amount is. And over the years, that's where also it's been really neat because, again, as I told you, we don't provide equity, but we've created over the years what we call replicatable equity, okay? And that's where our other lending platforms are very powerful because, for example, if a client owns a business, we have all these other working capital products, right? We have lines of credit, we have term loans. And it's been really neat because over the years, we've actually been able to help them get leverage that they then take that cash, Clint, and they plunk it down as their equity. And then we bring in the senior debt as well. And so it essentially creates a 100% financing solution. And so there's a ton of different strategies on how to do it. Obviously, the first and foremost is identifying where they qualify from a 3 C's perspective. Because obviously somebody with a 550 credit score is not going to get qualified for the best programs out there, right? Because a lot of when it comes to real estate investing, especially in the SFR space, it's all a function of your personal credit. It's a function of the property type, right? It's a function of the deal that you can, buy it at, right? Like what you can get the purchase price at. And then it's about identifying what you were talking about. Who are the lenders out there that have the ability to apply their senior debt to the purchase price? But then our best programs, I believe, go up to like 90% of the purchase price and 100% of the rehab. And that's a big deal, okay?
Yeah.
Because obviously rehab dollars are where you create that value in the property. That's where you create the lift, right? When you do the cosmetic work, when you blow out a wall and you expand, when you add a bedroom, right? And so that's a trick. And what we've done over the years as well, Clint, is we've taught clients about other working capital products, okay, such as lines of credit, term loans. We have a very popular credit card program that's used by a lot of the smaller real estate investors. Because obviously, if you have a credit card with 50 grand limit, 30 grand limit, 20 grand limit, you can run down the street to Home Depot, to Menards, any of the building supply companies. You can purchase the tile, the paint, whatever it is you're using for the rehab, and you can float that money, right, for 30 days. And then if you can get that property, cosmetically done, get the rehab done, and then get it leased up, then you can take the money that comes in from the senior debt, right, which is going to be your long-term money, your 10, 20, 30 year your 30-year money, and then you can pay off that working capital line of credit or the credit card or whatever it is that you're using. So really,
Yeah.
again, for us, it's about educating the client on the strategies of what they're looking to accomplish, but then matching that with the programs and the product lines that are available to them to be able to help them, get these transactions complete.
Yeah, one of the strategies they tell people is that they can set up their business and open credit cards under their business name so it doesn't report back to their personal credit profile, run all their rehab work through the Home Depots on those business cards.
Yep.
So then when they go in for the senior debt their credit score isn't going to show up with all those balances they're carrying or the trade lines that they've set up.
Right, which drives their credit score down, which then affects our job when we need to go refinance them, right? So you're spot on, right? It's shifting that overhead, right, or that amount of capital that's being used that doesn't adversely affect you. We see this all the time too on the business side of things, right, where the owner sort of floats the company with their personal credit cards. Big mistake,
Mhm.
because you can set up, like you're saying, those business lines or those business credit cards, keep your personal credit intact, keep it at that 750, 800 level, and then it makes our job a whole lot easier when we go to refinance you into a paper debt because you've got beautiful credit.
Yeah, so I hope that what people heard here is that you can get into properties where you only need 10% down in order to get that deal under to be able to buy that property. And then you have lenders that will not only give you the 90%, but they're also going to fund all your rehab work. Now, of course, the numbers have to work out. They have to go through the appraisals. And then what you said is that once that's done and all the properties completely rehabbed, then you come in, you reappraise the property, and you go to an A lender if you qualify, and you take out that C lender who is charging you a higher interest rate. So you get into that more senior level product that you're going to carry for 20 or 30 years.
Yeah.
So it frees up cash flow for you.
Yeah. You really have to look at the business as it's about creating a machine, right? I mean, over the years, Clint, we've worked with the guys that are just starting out doing one, two, three properties, right? All the way up to the clients that are doing 30, 40, 50 properties. That's a real business, right? That's a business doing millions of dollars of revenue, right? And they've got the teams, the infrastructure, the systems, right? And so if you're looking to do that, right, if you're looking to start out but then get to that level, right, you have to understand the capital market space. You have to understand how it is you use these programs to, in a sense, rinse and repeat the process, right, of the takedown, the rehab, the fix up, the get the renter in there, get it stabilized, and some of the biggest companies that we serve in this space, that's what they figured out, right? They just figure out how they can start, using this lender, get that process done. But then a lot of these bigger companies are doing it at much higher levels, right? And to be honest with you, one of the greatest things that all lenders care about is good borrowers with good track records, right? And so if you can create that relationship, and that's a huge difference. I want to take a minute, Clint, and talk about this, okay? One of the biggest battles that we see is that clients begin to hit a ceiling with their local bank. Okay, the bank is the first place that a client always goes to for capital. It's great; they're a paper, right? It's your 3,
Mhm.
4, 5, 6% money, right? It's the cheapest money, right? But if you really dive into how banks operate, right, they have to be careful from what's called a credit limit exposure perspective. Okay. And also some of these banks, it depends on the bank. Some banks love the SFR space, single family rentals, and some banks don't. Okay. And so many times what happens is we'll get really good operators, Clint, that have created a phenomenal track record, and their story to us is, hey, listen, we're maxing out our bank, our local community bank, our local credit union. We're at 5 million with them. We need to get to 10, right? We need to get to that next level, right? And the whole beauty of the alternative capital markets is a lot of these other lenders and when I use the word B paper lenders, right? People think that that's more expensive money, right? You have to understand in the SFR space, we have like what I call Alt A lenders. Okay, an Alt A lender is not a bank, but they still have like A paper rates, right? But one of the biggest advantages is that these Alt A lenders have a lot of them have unlimited capital. And so what I mean by that is, they want to partner with great operators, right? Great groups that have the ability to execute. And whereas a bank might limit you and give you a ceiling of 5 million, 10 million, whatever the amount is, right, per that bank, a lot of these other groups, that's their whole business. I mean, I have great relationships with a lot of the ownership groups of a lot of our lenders, and they'll be the first to tell you, like, that's what they're looking for, right? That they just want a rinse and repeat borrower that they can keep lending to, and the client understands their program, and the lender understands their business, and then it's just a win-win. It's a marriage, right? That gets everybody growing together.
Okay, so let's assume that I'm an investor and I have 8 properties, and each of those properties has about $60,000 to $80,000 in equity in it. Can I bring, and they're each of them are held in separate LLCs. So could I bring those 6 properties to you and say, listen, can we do a blanket loan, cross collateralize all of these assets to take some cash out so I can roll that into my next deal? Does it work that way? Do they have lenders that
Yeah.
do that?
So you hit on a great point, which is one of the strategies that we talk about with all clients, right? The ability to grow, again, is limited by your equity, right? And it's either the balance sheet equity you have today, it's your ability to raise it, or it might be secretly trapped, right, in your existing portfolio. And so what you just hit on is something that we do an analysis of when we first meet a client, whether they have 5 properties or 50 properties, right? We go through and we analyze which properties have the most equity, and then you hit it again on the head. You either are looking at doing an individual cash out refinance per property or per LLC, or we also have the lenders that will do blanket loans, right, or basically a loan against multiple LLCs. And yeah, those are the two big strategies that we also look at first, because again, that's a simple, easy way for you to boost up your balance sheet equity to then be able to grow and again access other properties and keep the machine growing and going.
So on a deal like that, what is the typical LTV? I mean, how much can I be looking to pull out? Is it going to be 80/20, 70/30, 90/10?
Yep. Yeah. So again, it's a function of the 3 C's and it's a function of the ABCD model, right? I think our highest leverage on long-term debt pushes up to 85%.
Hmm.
But that's obviously for the creme de la creme, right? That's for the best of the best borrowers. Typical leverage, bridge debt's going to be in your 65, 70% range. Obviously, a B and a C and a D paper bridge lender, they have to have enough spread, right, or enough margin so that if they do put you into a 1 year or 2 year bridge facility, they have to know that the senior debt, the long-term debt, which typically pushes the 70, 75, 80%, that higher leverage, right? They have to
Hmm.
know that there's a spread there so that they can be refinanced, right? So that their bridge debt can be taken out. Once you've improved your credit score or once you've gotten the properties, fully leased up and occupied. So yeah, so understand, the B, C, and D lenders obviously typically go lower leverage, right? Because they know that if they're short-term money, right, 1 to 5 year money, that they have to have a spread in there to be able to get taken out by the long-term A paper lenders.
Got it. And so what people, if they don't understand what you mean by that, what he's saying is that when the A paper lender comes in, there has to be sufficient equity left in your property
Right,
in order for you to get that deal done. Because if they took everything or gave you
right,
everything and sucked it all the way up,
right,
no A paper lender is ever going to take them out. And they make their money, these other guys, on the turn. So they don't want to tie their money up for 30 years. What they want to do is get in, get out, and get paid.
that's right.
And so they're going to help you to a point, and they expect you then to refinance them out so they can start churning their money again.
Yeah, which is where our guidance is huge, right? So let me tell you a story, right? As I shared with you, going into this year, we launched 2 new sister companies, right? Rainstar Development Capital and Rainstar Project Capital. Okay, Our project capital finances super large transactions, 25 million all the way up to 10 billion. Rainstar Development Capital is specifically focused, Clint, on the new construction housing sector. Okay, and the product that we have is fantastic because it pushes higher leverage, which is a big deal for a lot of these housing developers. Okay, and
Mm-hmm.
so for the housing developers that we're financing, we're doing multifamily, we're doing new construction mixed use with a heavy housing component. We're doing condo towers, senior housing, but not like assisted living, the 55 and older, right? Apartments, student housing, and then we're very big right now into the B2R space, build to rent, right? That's where somebody's building subdivisions, okay? And one of the deals that we did in my backyard in West Michigan was a $33 million deal. And the nice thing about that whole process that we did with that developer is they're building 140 townhomes that they then are going to lease up, right, rent out, and then they're going to hold for long-term cash flow. Okay. And in that process, we were able to bring in the larger, senior debt product. And the beauty of the program that we have through Rainstar Development Capital is we can push all the way up to like 90% loan to cost of these single family homes or multifamily, right? And then literally I was on a call yesterday on this. They're currently at about 40% done of the project, right? They have been very busy building out those townhomes. Our market in West Michigan is super hot, right? So they're actually at 40% completed, 100% lease of the 40%. So literally as they're finishing a home, they're getting a renter in there, right? And then for that client, what we're going to do is we're going to refinance them into your long-term 20-year money. We'll probably either use, agency debt, CMBS debt, right? The rates have gone up obviously because of, some of what's gone on in the market, right, the last 60 days. But, before they were in the threes, right, low threes. And then a lot of our clients, when they get to that level, they just get that long-term debt locked in and they just cash flow those things, right? So that's an example, for obviously a larger, residential project, right? But the same thing holds true if you're just starting out, if you're doing, just a one-off deal, right? A one-off single-family home. The trick is to learn how to again manage your balance sheet equity so that you're freed up maybe not just to do one house, but two houses or three houses or four houses, right? And that's where these higher leverage products have huge advantage, especially Clint, if there's going to be some sort of build to sell model or like a build and then rent model, right, where you've got a rehab component, right, where you're executing and creating value in the property. That higher leverage is a big deal because it allows you to do other projects and other properties.
You know, there's a lot of different investment strategies that are out there. And let's assume somebody wanted to do traditional house hacking where they're going to be renting out rooms and they find a property. How would that work with the lenders? I mean, are there certain things that maybe you haven't dealt with this before, where if they came in to Rainstar, they're looking to get a loan, they say, hey, they have this property is they're wanting 600,000 for it. With my income, I only can qualify for $450,000. But because I'm going to be renting out three of the rooms, which based upon room rents in that area is going to generate an extra $2,800 a month, I can qualify.
Yep.
Or there's lenders that would look at that and say, yeah, we can do that deal because the traditional bank's probably not going to do it for
The VRBO and Airbnb strategy is the greatest disruptor in the marketplace currently, Clint.
them.
It
Hmm.
is the ability to take a single family home that you would get 2 grand a month, 3 grand a month for, and juice up that revenue, right? And juice up that cash flow. And so, yeah, to answer your question, we have all the lenders that are beginning to finance the Airbnb strategy. I highly recommend looking at it. I mean, I shared with you as of the shooting of this video, right? My wife and our kids, we're here in Scottsdale, Arizona, right? And we're staying in a VRBO, right? We're on a beautiful one right on TBC Golf Course, right, where they've got the championship course, the stadium course. And literally, I've had meetings with a property manager that manages this property that my family's staying in. And I'm thinking about throwing a strategy together to start acquiring VRBO and Airbnb properties. I mean, the pro formas that this property manager has shared with me, right? I mean, it's sick, right? I mean, it's just incredible. So obviously, you've got to be able to be strategic from a marketplace perspective, right? You have to know your local market. You have to know what the drivers are. Here in Scottsdale, obviously, they've got a world-class golf. They got minor league baseball. They just built a huge sports complex, I think, down in Mesa. So you got to really analyze the local market drivers, right? If you're going to be executing on an Airbnb or VRBO strategy, but it is genius, right? You're basically taking a home and you're almost making it like a hotel, right?
Hmm.
And when you look at a lot of the marketplaces across the United States, there's a huge opportunity for this strategy, and it's a disruptor, right? It's just how like Uber changed transportation, Airbnb and VRBO are changing the game and putting a lot of money in a lot of these real estate investors' pockets.
So what I'm hearing is if I wanted to use that strategy and I wanted to get a loan based upon the projected income, I'm going to have to bring a lot more to the table as far as a pro forma is concerned. Uh, Lenders concerned is that they want to know what that market's about, what similar homes are renting for, how much
That's
income
right.
is being generated, so you can hit or they can loan against that. But if you don't have it, it's not going to work.
And the beauty of it, for example, some of the property managers, right, that I've met with here in Scottsdale, there's softwares out there, right, that clients can use, and literally these property managers, the sophisticated ones, right, they have these softwares that can take a property and they can analyze the amount of rent you can get for it, whether it's 3 bed versus 4 bedroom, right? And another big strategy, like one of the CEOs, the lady that was CEO of the property management firm that rents this VRBO I'm in, she was explaining that they strategically will figure out how to add a couple beds, right? Because obviously, if you can rent to families, right? That's a huge strategy versus just renting out one bedroom type thing, right? So and then obviously if you're in a VRBO like we're in right now, we're overlooking the beautiful TPC golf course, has a pool, has a hot tub, has a putting green. It has all those additional amenities. Those are
Yep.
other ways, but there's these softwares out there that have been developed that can help analyze that local market, analyze that property, and help figure out the pricing. You know what I mean? And like next year, I guess I knew this, but I didn't know this. Next year here in Arizona, they're hosting the Super Bowl. And so, from what the property management groups are telling me is, the rental rates are going to skyrocket next spring because they've got the Super Bowl, which always, brings in a huge boost to economic development. So it's really about understanding the marketplaces. Highly recommend building teams, right? I'm sure you've experienced that, Clint, building your business, right? I highly recommend all real estate investors. You have to build a strong team, right? Whether it's using a firm like Clint's, right? Whether it's having a strong CPA, a strong property manager, using a firm like Rainstars, right, on the capital market side. It's about working with professionals. The better team you build, the better you're going to grow and the faster you're going to grow.
All right, so you can do the deals in, it sounds like, for the people that want to do short-term rentals and other things that are alternative to the standard. What about flipping? If I want to flip properties, you have products for those?
Yeah, flipping is a huge strategy. Obviously, you're either running a build to sell model, right, or
Hmm.
a build to rehab it and then rent model. Um, you know, Another massive issue going on right now, which is why we started Rainstar Development Capital, right, is America has a housing shortage, right? And so good quality, affordable market rate homes and multifamily are a big need that we see across many markets, right? So the ability to go in and take, purchase dilapidated homes, homes that need cosmetic, homes that need bedrooms and bathrooms added. This is a huge need. I mean, literally, the reason we raised the fund, right, for Rainstar Development Capital is because we feel there's a tremendous opportunity to deploy significant capital. Obviously, that's on new construction, right? But the same holds true for old homes, right? We see markets across the United States that investors are going in and buying up all the old homes, right? And just pouring rehab dollars into those things. And at the end of the day, I think it's fantastic. I think not only is there huge profits that these real estate investors can be creating, but I also think there's a huge mission behind it, right? Which is at the end of the day, families need homes, right? The home is the core, one of the core foundational pieces to family life, right? And so the ability for these real estate investors to fix up these homes, I think they should be very proud of themselves, just what they're doing from a mission perspective.
So what are you doing right now in the market? Where do you find most of the money? What type of deals is it chasing currently? So I'm just trying to get a sense for, if I'm a real estate investor, who the banks are lending to is probably telling me, hey, that's an area of the market that they feel comfortable with, and maybe I should look at that.
Well, obviously, we're living, in a post-COVID environment, right? It's COVID is still around, right? But COVID was a big disruptor, right? I mean, when you look at the commercial real estate space, obviously the office space game changed, right? Retail changed, right? But again, similar to what we're talking about here, multifamily and single family rentals are hot, hot, hot. Okay, people always need a place to live. They might not go into an office anymore to work, but they need a home to have shelter and provide for their wife and their kids, right? And so anyway, money continues to pour into the SFR and to the multifamily space. Again, we do see some banks that pull out of that because it's not commercial, right? There's
Hmm.
not a strong credit tenant, right? Like you would get with an office or a triple net asset, or in any of the the property types. But yeah, we saw on the commercial side, retail get hit, office got hit, some hospitality got hit pretty hard. A lot of our hospitality lenders, when the COVID was first starting, that just travel dropped, right? I mean, people stopped traveling, right? We're seeing a huge bounce back on that, so it's getting back to kind of pre-COVID levels, but that's kind of the analysis on the commercial side. And then single family and multifamily, it's hot. I mean, again, that's we're putting our bet on it, right? But I think the biggest battle that we have is a lack of inventory. Okay, and a lack of inventory is stemming from obviously the raise in pricing, right? In a lot of these markets because there's shortages, right? Which is
Hmm.
where we're trying to help in regards to new construction, right? But second, the rookie or the smaller investor is having to fight the Blackstones, the BlackRocks, the Goldman Sachs, the big hedge funds of the world, right? And again, why are the groups with institutional money jumping in and buying up whole neighborhoods at a time? It's because they understand the strength
Yeah.
of the homeowner and they understand the strength of the rental market. People need a place to live, which is where that rental demand, right, is through the roof. So my message is if you can play in that space. I mean, look at if you follow Grant Cardone, I don't know if you like him or
Hmm.
not, right? But why is he going after multifamily, right? He's raising all this money, acquiring properties left and right. Why is that, right? If you listen to what he says, is because at the end of the day, people need a place to live, right? And they will always need that, but they might not always need the office building, right? So I think it's a very strong strategy from an investment perspective to target the SFR space and the multifamily space. We obviously are focused heavily here at Rainstar on that space, and I just think it'll continue to grow. We see a huge opportunity on the new construction side. We see a huge opportunity if you can get the inventory on the ownership side, for the from a rental perspective as well.
Are there any states that you don't loan to, or where properties are located?
So for Rainstar Development Capital, yeah, there's a couple states that we don't touch, right? We're not big in New York at all because there's like the judicial laws, and so most states are covered, but we do have a couple that we don't touch basically. So, but yeah, if anyone is interested, we also have, and I'd be more than happy to share this with you. We have a roster list of like the top growing MSAs, right? So marketplaces, and I think that's a huge thing that most investors need to be really aware of, right? you need to be following trends. Okay, so obviously everybody knows that a lot of people are leaving California, right? But where are they going, right? Scottsdale, Arizona is huge, right? Boise, Idaho is huge. Salt Lake City is growing left and right, right? So if you can strategically align your business to ride the wave of where the migration is going, there's only going to be huge profits that you'll generate. So I'd be more than happy to share that list with you if you want to post it, on this list as well.
Oh, that'd be great. We'll post that in the show notes. And this has been fabulous having you on here. If
Yeah.
somebody wants to get in touch with you, what's the best way to do it?
Just go to our website, rainstarcapitalgroup.com. We have a tremendous amount of content. Okay, one of the things that we have worked very hard on over the years is creating transparency in the capital markets. And so when you come to our website, you're going to see tons of videos. You're going to see webinars. You're going to see our magazine, right? Literally on the capital market section of our website, we list out all the different lender profiles and what they're looking for from the three C's perspective, right? So we over the years have really gotten applauded for that focus on education because again, once the client understands how the capital markets work, it allows them to reverse engineer the result that they want, which is obviously going from one property to 10 properties, 10 properties to 100, 100 to 1,000, right? And really, it's just about identifying how to use these different tools in your tool belt, to get the end result.
Great. Well, we'll have that link in there. So people are watching, they want to go to your website, they can do that, reach out to you. Anything you want to leave in passing?
No, reach out to Clint Coons and his firm. They do an awesome job. We also send clients his way, and just proud of you, my friend, for the company you've built, and you and I, know how much work it is, So yeah, I'm happy to do this with you and continue to grow.
Kurt, thanks for taking time out of your busy day to do this. The people who are watching or listening are going to get a ton of value. So again, thank you very much.
Yeah, blessings to you.
All right, take care.